Hello, this is Bob Joyner, and in this video we're going to be talking about the SPY, of course, but we're also going to be talking about tipping points in the SPY. Very interesting week this week. We're looking at July 29th through August 2nd, 2024, and very interesting because each day this week, between around 10:15, the SPY and the whole market pretty much did a reversal pattern. And the key point of this video is if you can identify process of where that tipping point occurs each day. And it's a big tipping point, but if you can identify that, then it helps you stay on the right side of the trade, helps you stay on the right side of the trend. It was a big week for winners and for losers. If you had a great week, then it's probably because you stayed on the right side of the trend and you saw the tipping point occurring and you traded it and stayed with it for a long time, because there were some very big moves this past week in the SPY. And if you're losing this week, this would be a good review for you. You'll see the timestamps on the charts I'm getting ready to show you, and you can review it with your own trades. You can also look at your own charts and see how do my charts compare to your charts. And of course, if you're a member of SPY Talk, then this will be a review of a key strategy that we use in the chat room and help you to follow along. Alright, so let's go ahead and dig into the charts. Alright, so just to set the stage, I want you to see all the economic reports that came out this week before the market opened or right after the market opened. If you look at the list, a lot of reports about unemployment rate, employment changes here in the U.S. So as you look at the following charts, ask yourself, what do you see? Are there certain patterns and congruencies that present themselves over and over on these charts? And first off, I'm just going to flash. This is Monday. Circling an area that I want you to kind of watch, just flashing real quick. This is Tuesday. You can see all around 10 o'clock. This is a Wednesday with the big push up. And then we have Thursday with another down day at that 10 o'clock period. And then that's Friday, different 10 o'clock period. So what we're going to do now is we're going to dig into these individual charts. Alright, so what you're looking at here is a 3-panel chart. I'm using 26-minute chart on the far left, a 1 minute here on the middle panel, and then a 5-minute chart over here on the far right. All 3 panels in this case are using Heiken-Ashi candles, and of course there's a lot of stuff on these charts which you don't understand probably right now, but I want to focus on 5 things that happen in these tipping points. The first line I want to talk to you about is this blue line up in here, which is based on the 5-minute half line. If you've watched some of my previous videos, you know what I'm talking about there. The orange line is this Chiku span on the 5-minute chart. Okay, so I've drawn a yellow circle here just to denote in this key area. This is where you see price coming back below that blue line. We have that moment of transition there, and other things follow, which I'm going to point out as we go along. The orange line on all these charts is going to be the 26-minute point where the Heiken-Ashi candle made a trend change, which means it simply moved from an open green candle to a closed red candle and denoted a change in the color and structure of that candle on the 26-minute chart. 1-minute chart, just to point out one thing here. This is the J Kumo. If you're not familiar with Ichimoku, this is an area of support and resistance, and you can see how right after that yellow circle had a little test of the blue line, test of the J Kumo there, the top part of it, and then we just simply came back down. Alrighty, if you're enjoying this analysis, and I'm not done yet at all, but you might be interested in the all-day SPY chat room that I lead. We do analysis, live analysis on the charts, just like what you're seeing here, but it's done live, and it's still just $29 a month. If you want to look at last week's video, that's where I went into detail about SPY Talk, and you can find that video on YouTube if you're interested. Alright, back to the review. Okay, so we're looking at Tuesday now on this chart, and of course if you're not using my charts, then you can use your own charts and go back and do this review and see if you see a transition or a tipping point in the same area that I'm describing. On Tuesday, after this red circle, again you see the 5-minute half line being violated, right? You see the 5-minute Chiku falling below the historical price curve. Over here on the middle panel, the 1-minute chart, you can see again J Kumo flipping down with a bear flip, whereas before it was green. And you can see the volatility stops also breaking down eventually to where we have both of our volatility stops above price. And then the last thing to point out is on the middle panel again, CCB is this histogram that you see down here, and you can see where that is turning negative or going below the line, whereas before CCB was above the line. So what does all that mean? Well, if you're tracking 0-day expiration options on the SPY, the 554 put was 122 at 10:35, and 31 minutes later it was valued at 333. So pretty important to catch these transition or tipping points that I'm talking about, and I'll give you similar prices on the rest of these days of this week. All right, so now we're looking at Wednesday, which was the big bull day that we had midweek. And you can see right around 10 o'clock again, 5-minute half line is violated, this time to the bull side. 5-minute Chiku moves above the historical price curve. On the 1-minute chart here in the middle panel, J Kumo makes a bull flip. Our volatility stop dots both become green, and CCB down here in the bottom middle panel also moves back above the zero line. So again, how does that translate? The same 0-day expiration calls, in this case 552 call was 93 cents at 10 o'clock. By 10:32 that call was already worth 175. So again, just to emphasize that these transition points, tipping points, are very volatile, and you can make a lot of money in a pretty short amount of time there. Now we're looking at Thursday's charts. Again, on the far right, just starting over here on the 5-minute chart, keeping that 5-minute half line in view, which is that blue line, of course, and you can see where price violates that blue line. 5-minute Chiku again on the 5-minute right panel falls below the historical price curve. J Kumo again becomes a bear flip. Volatility stop dots both turn red, and CCB down here in the bottom also turns red. So how does that translate into 0-day expiration options? Tracking the 550 put for Thursday, the 89-cent entry at 10:06 would have resulted in a 4-timer by 11:03, about an hour later. And actually, if you had held on to it until 2:38, that 89-cent put would have been worth 10 bucks per contract. So pretty nice move. And this screen is just showing you the full annotations that I mentioned already, just drawing out the lines so that you can see it. Alright, now we move into the Friday chart, and again you can see the 5-minute half line being violated. The one difference on this chart was you see a red line up here that's based on the 26-minute Heiken-Ashi fractal line, so we already had a more bearish context before the market even opened up on that day. And here are the results for Friday. The 530 put was at 88 cents at 9:33, and by 10:15 that contract was worth 270. So I hope this review has been helpful on the 5-point transition, or what I call the tipping point. It's actually a tipping process, and I hope you've been able to follow along on your charts, or if you're using my system and my charts in the chat room, Spy Talk chat room, then this is a great review for you. If you're not a member, you're welcome to sign up. There should be a link somewhere here, or you can just go to spytalk.info for more information. And I hope this review was helpful for you, and hope you have a good week of trading ahead.